This morning, Tehran issued a warning that sent shockwaves through global energy markets. Iranian officials declared that any commercial vessel failing to use approved routes through the Strait of Hormuz would face what they called a forceful response. The message was blunt, the timing was not accidental. Just hours earlier, negotiators from the United States and Iran had wrapped up another round of indirect talks in Doha, Qatar talks described by mediators as showing positive progress. Oil prices had been falling for 3 straight days on hopes that the guns might finally go quiet. Brent crude eased, traders exhaled, and then, without warning, Iran's military posture hardened again. This is the paradox defining the current moment in the Middle East. Diplomats speak of progress in air-conditioned conference rooms in Doha. Meanwhile, warships and tankers move through one of the most dangerous waterways on Earth, a 21-mile-wide choke point through which nearly a fifth of the world's oil supply passes every single day. The Strait of Hormuz has never simply been water. It is leverage, it is the pressure point every side knows how to use, and Iran just reminded Washington, Doha, and every energy trader on the planet exactly who controls the switch. What happens next in these negotiations and in these waters could determine whether Americans see relief at the gas pump or a new shock to an already fragile global economy. We are going to break down every layer of this crisis, the history, the flashpoints, and what intelligence analysts are now watching for, if understanding the forces shaping global security matters to you. Subscribe now because this story is only getting started. To understand why Iran's warning matters today, we have to go back decades because the Strait of Hormuz has been a fault line in US-Iran relations since long before this current war began. The roots trace to 1979, when the Islamic Revolution toppled the Shah and severed a 3-decade alliance with Washington. What followed was the hostage crisis, then the Iran-Iraq War of the 1980s, a brutal 8-year conflict during which the United States quietly backed Baghdad and Iran first began using naval mines and speedboat attacks against oil tankers in the Gulf. That period, remembered as the Tanker War, established a pattern that echoes today, Iran leveraging the strait as an economic weapon whenever it feels cornered. The 2015 nuclear deal briefly eased tensions, offering Iran sanctions relief in exchange for curbs on uranium enrichment. But in 2018, Washington withdrew from the agreement, reimposing crushing sanctions. Iran responded over the following years with escalating provocations, tanker seizures, drone strikes on Saudi oil facilities, and repeated naval standoffs with US forces. Then came the current chapter. Open war between the United States, Israel, and Iran, triggered by strikes targeting Iran's nuclear infrastructure. Oil markets spiked to levels unseen in years, global shipping insurers raised premiums overnight, and for the first time in a generation, the possibility of a full Hormuz closure moved from theoretical to plausible. Now, indirect talks in Doha represent the first real diplomatic opening since the war began. Qatari mediators have shuttled messages between Washington and Tehran for weeks, with officials on both sides describing incremental progress. But history warns us, every previous de-escalation attempt in this region has been fragile, reversible, and vulnerable to a single miscalculation in those narrow, contested waters. Piecing together the last 72 hours reveals a rapid, high-stakes sequence of moves. It began with the conclusion of another round of indirect US-Iran talks in Doha. Qatari officials, acting as intermediaries, characterized the discussions as constructive, with sources indicating a third round could take place direct, not indirect, later this month. That detail alone marked a significant shift. Direct talks would represent the first face-to-face diplomatic engagement between Washington and Tehran since the war erupted. Markets reacted immediately. Brent crude fell for a third consecutive day, dropping 2 levels not recorded since before the US-Israel war on Iran began. Traders interpreted the drop as a bet on de-escalation, a signal that supply disruption risk was easing. But Tehran's own signals told a different story. Within hours of the Doha talks concluding, Iranian state channels issued the tanker warning, instructing vessels to strictly follow approved routes through Hormuz or risk a forceful response. Simultaneously, on Iran's own live briefings, officials vowed a decisive response to any American miscalculation language deliberately calibrated to sound cooperative on diplomacy while remaining maximally threatening on military posture. Washington's position, according to available reporting, is that it seeks a durable de-escalation framework, potentially tied to nuclear inspections and sanctions relief discussions. Iran's public position emphasizes sovereignty over its territorial waters and warns against what it calls unauthorized foreign naval activity near its coastline. What remains unconfirmed is whether the tanker warning was directed at any specific incident or issued as a general deterrence message ahead of anticipated direct talks. Intelligence agencies are reportedly parsing satellite imagery of Iranian naval assets near the strait for any signs of unusual troop or missile battery movement. Activity that would suggest the warning is more than rhetoric. To understand why this single stretch of water commands such outsized global attention, we need to examine its strategic architecture. The Strait of Hormuz separates Iran from the Arabian Peninsula, narrowing at its tightest point to roughly 21 miles wide with shipping lanes in each direction spanning barely 2 miles. Nearly 20% of the world's total petroleum liquids consumption transits this passage. There is no viable alternative route for most Gulf producers. Saudi Arabia, the UAE, Kuwait, and Iraq depend on it almost entirely to reach global markets. For Iran, this geography is its single greatest asymmetric advantage. Tehran cannot match American naval power ship for ship or match Israeli air superiority jet for jet, but it does not need to. Iran's Islamic Revolutionary Guard Corps has spent decades building a doctrine specifically designed for these waters: fast attack speedboats, coastal anti-ship missile batteries, naval mines, and drone swarms, all optimized to threaten, harass, or disable much larger vessels in confined, shallow waters where size becomes a liability rather than an advantage. The United States, in turn, maintains its Fifth Fleet headquarters in Bahrain, positioned specifically to protect this corridor. American carrier strike groups, destroyers, and minesweepers rotate through the region constantly, tasked with keeping shipping lanes open under what the Navy calls freedom of navigation operations. This is why any Iranian threat toward tankers carries disproportionate weight. It is not simply a regional skirmish, it is a direct challenge to the security architecture underpinning global energy trade. Analysts note that even a partial, temporary disruption lasting days rather than weeks could send shockwaves through insurance markets, shipping schedules, and fuel prices worldwide, given how tightly global supply chains are calibrated around uninterrupted Hormuz transit. Intelligence and defense analysts are approaching this moment with calibrated caution rather than alarm, but caution grounded in real historical precedent. Regional security analysts note that Iran has issued similar warnings before without following through on large-scale disruption, using the threat itself as the instrument of pressure rather than actual interdiction. The logic, according to this assessment, is straightforward: closing or blockading Hormuz would devastate Iran's own oil exports and invite overwhelming military retaliation. The threat is calibrated to shape negotiating leverage in Doha, not to trigger open conflict. Naval and military analysts focus instead on capability signals, troop movements, missile battery repositioning, and naval fast boat activity near the strait. Absent a visible surge in these indicators, most assessments characterize the current warning as psychological and diplomatic pressure rather than a precursor to imminent action. Energy market analysts offer a complementary view. Oil's 3-day decline suggests traders are, for now, pricing the Doha talks as more significant than the tanker warning, betting that diplomatic momentum will outweigh military rhetoric in the near term. But these same analysts caution that pricing can reverse within hours if verified. Naval incidents occur, given how sensitive markets remain to any signal from the Gulf. Diplomatic analysts point to the reported shift from indirect to potential direct talks as the most consequential development of the week, a structural change in negotiating format that historically precedes either breakthrough or breakdown, rarely stasis. Institutions monitoring the region describe this as a hinge moment. The coming weeks will likely determine whether the current trajectory bends toward a durable de-escalation framework or reverts toward the confrontational posture that defined the opening phase of this war. Not every analyst reads this moment the same way, and the opposing interpretations deserve equal scrutiny. Some regional experts argue that Iran's tanker warning should be read primarily through a domestic political lens rather than an international one. On this view, Tehran's leadership faces pressure at home to project strength while simultaneously negotiating with Washington, a balancing act that requires tough public rhetoric even. As private diplomatic channels move toward compromise, the warning in this interpretation is theater for a domestic audience as much as a message to foreign powers. A separate school of thought cautions against dismissing the warning too quickly. These analysts point to the tanker war precedent of the 1980s, arguing that Iran has historically escalated gradually and unpredictably, with early warnings sometimes followed by real action weeks or months later after negotiators believed the danger had passed. In this reading, complacency itself becomes the risk. There is also a diplomatic critique worth noting. Some observers argue that Washington's own posture, maintaining a heavy naval and air presence in the Gulf even during active negotiations, gives Iran justification to characterize its own military signaling as defensive rather than provocative. Qatari mediators, according to this view, are working to manage exactly this perception gap, encouraging both sides to avoid actions that could be misread as escalatory during a fragile negotiating window. Finally, skeptics of rapid optimism note that positive progress is diplomatic language that has been used before in this conflict without producing a lasting ceasefire. Until a concrete, verifiable agreement is signed, these analysts argue, all Gulf activity from tanker warnings to talk of direct negotiations should be treated as provisional, reversible, and subject to sudden reversal. The consequences of this standoff extend far beyond diplomatic briefings and naval charts. They reach directly into the daily lives of Americans and the broader global economy. Economically, the stakes are immediate. Roughly a fifth of global oil supply moves through Hormuz daily, meaning any credible disruption threat can move markets even before a single ship is touched. Brent crude's three-day decline offered temporary relief at gas pumps, but analysts warn that relief is fragile. A verified naval incident, a seized tanker, or a failed round of talks could reverse that trend within hours, pushing fuel costs and, by extension, inflation across shipping, manufacturing, and consumer goods sharply upward. Militarily, the implications ripple outward across US alliances. A prolonged confrontation in the Gulf would likely trigger expanded naval deployments, stretching American resources already committed to competing priorities in the Indo-Pacific and Eastern Europe. Gulf allies Saudi Arabia, the way, and others face their own calculus. How closely to align with Washington's posture without inviting direct Iranian retaliation against their own oil infrastructure, a vulnerability exposed dramatically in past attacks on Saudi facilities. Geopolitically, both Russia and China are watching closely. Sustained instability in the Gulf could reshape global energy flows, pushing importers toward alternative suppliers and altering long-term trade relationships. A weakened Western position from prolonged conflict, or alternatively a diplomatic win for Washington, would send signals to Moscow and Beijing about American resolve and reliability as a security partner. For ordinary Americans, this story is not abstract. It is the price at the pump, the cost of shipped goods, and the broader question of whether the country is heading toward deeper military entanglement or toward the first durable off-ramp from a war that has already reshaped the region. Two credible paths now lie ahead, and the coming weeks will likely determine which one the region follows. The first scenario, diplomatic momentum holds, indirect talks in Doha transition successfully into direct US-Iran negotiations later this month, producing a framework that addresses nuclear inspections, sanctions relief, and mutual security guarantees. Under this path, Iran's tanker warning fades as a footnote. Tough rhetoric deployed. During a transitional phase rather than a genuine military signal, oil prices stabilize, naval postures gradually ease. The war's most dangerous chapter closes through negotiation rather than further confrontation. The second scenario is far less reassuring. Talks stall or collapse over verification disputes, sanctions terms, or a triggering incident in the strait itself, a seized tanker, a naval confrontation, a miscalculated intercept. In this path, Iran's warning proves to be exactly what skeptical analysts feared, an early signal of renewed confrontation rather than empty leverage. Oil markets spike, insurance costs for Gulf shipping surge, and the international community faces the prospect of a wider, more dangerous conflict in one of the world's most economically vital waterways. What we know for certain, Doha talks concluded with cautious optimism. Oil fell for 3 straight days, Iran issued a specific formal warning to commercial shipping, and officials on both sides are now discussing a shift toward direct negotiations, a structural change with real historical weight. What remains unknown, whether this warning is deterrence, domestic messaging, or genuine preparation for escalation. Only the coming weeks and the choices made in Doha, Washington, and Tehran will answer that question. This is a story that will directly shape gas prices, global markets, and America's military posture in one of the most contested regions on Earth. If you want to stay ahead of how this crisis unfolds, subscribe now because the next chapter of this story is coming fast and you will not want to miss it.